Hey there guys, what's going on and welcome back to our channel. When you think about the word debt, does it make you squirmy? What if we tell you that debt doesn't have to be the monster under your bed, but something that has many loopholes and can actually be your friend? We'll show you a couple of ways in which you can profit from your own debt. Be prepared to have your mind blown by these 5 ways rich people make money with debt. Number 5, trading based on debt. Usually, the traditional businesses had a way of commencing, which is to look for an investor, borrow money from them, raise the empire from that money, and pay back the loan to get rid of the debt. This isn't an incorrect way of starting a business because history proves that it has worked for many years, but there are better ways. In today's world, you need to perfect your selling skills more than anything. If you look at China, it has hundreds of factories working day and night and producing everything the world ever needs. Now, gone are the times when you had to take a plane, go to China, bring back a container, and distribute the material. All of that is now available on the internet. However, many factory owners in China can now give you their products without taking money from you. The catch is that they want you to sell their products. They build and you sell and then keep the profit for yourself. And all of this while you take 0 dimes out of your pocket. So the lesson to learn here is learn the selling skills and earn the trust of factory workers before starting a business.
We're in a market dip. I mean, you'd obviously have obtained extraordinary returns. I pointed out in my investing lifetime.
The stock, when you short it, can theoretically go to infinity. When you buy a stock at 10, you can only lose 10 points.
Number 4, refinancing. Imagine if you want a new house, but your dollars are being cut every day going towards your mortgages. Rich people often take advantage of the real estate debt because there are a lot of loopholes in there. For example, you find a house for $500,000 due to its worn out conditions. So, you go to the bank and you pay a 20% down payment for the house and get a mortgage. Now, if you use 10% of that money, or let's say $50,000 towards the house renovations, you can go to the bank and refinance your mortgage. Now, here's the catch. When you went for your first mortgage, the value of the house was $500,000, but after the renovations, the house is up to $700,000 worth of value in the market. Now, the first time, you'll get an 80% mortgage, which means out of the $700,000, you'll have $560,000. From this amount, $400,000 will go to the first bank that gave you your first mortgage, and now using simple maths, let's deduct $50,000 that went into the renovation. Now, despite all of it, you earned a profit of $110,000 out of debt. Now, you also have a property that you can rent to build equity and earn passive income. See, you can use debt to generate so much money and avoid taxes. That's how real estate investors get rich, and now you can too.
And for an asset, does it put money in your pocket? So when I have a rental property here, it puts money in my pocket.
Number 3, hedge funds. Hedge funds are made by the rich people for the rich people to make rich people, wait, you guessed it right, richer. Well, hedge funds are completely its opposite and quite an unpopular strategy. In this, investors wait for the company's downfall and invest in it. For example, if Apple says that they will make smartphones that won't allow Facebook to track user activity, then Facebook stocks will have a downfall. However, you can call your broker and get stock for $100, and when your prediction will come true, you'll buy the stock for cheaper prices and then return it to your broker and keep the profit. Now, this whole thing seems extremely risky, especially because if your predictions don't end up coming true, you'll have to return the money you bought the stock for from your broker plus the interest. However, this isn't so bad when you're a big businessman and have hundreds of analysts working for you, and then you have luck on your side and you can make ample profits through being in debt.
Could be considered a comeback year for hedge funds in general because most strategies did actually outperform in February and March when markets became spooked by the pandemic-induced shutdowns.
Number 2, Forex. Forex is basically a trade of foreign currencies. You can exchange one currency for another by speculating which currency will rise or fall with time. This is not unpopular, but it works on a different structure. For example, if you have American dollars, you can't use them in Japan or China. For this, you'll have to opt for currency exchange. But sometimes, people buy currencies and wait for them to rise against the American dollars, which are usually a higher currency against others, and then you wait to make profits. Currency investors can lever up their accounts 100 to 1. The pros of currency trading are that you can take a small amount of money and turn it into significant sums very quickly. Before starting that, you need to make sure you completely understand how this trading is done and always have a contingency plan. Let's see how debt fits in here. Forex is different from other markets because when you're trading $1 in Forex, you can additionally borrow a hefty $100 bill. Now, imagine that your speculations are all correct and you make as little as 1% of the profit. So that means that if you trade using $1,000, you'll earn $10,000 in return, and it will have a gigantic effect on the total value, and you will earn way more than you borrowed.
But the beauty about Forex is that it trends so well. So for example, the best place to put your money right now anywhere in the world is in the US.
Number 1, credit score. We've talked in detail about why debt doesn't always have to be a monster standing in the corner of the room to scare you. Sometimes, if done rightly, debt can be your friend and also make you wealthier in no time. We know now that loaning money to start a business can be beneficial if you know ways to generate more money to make profits and return what you borrowed. Unless it's credit card debt, which is not helpful due to its high interest rate. However, finding loaners is not a piece of cake. You need to make sure your credit score reflects that you can be trusted with money, otherwise no one will rely on you. There are billions, if not trillions of money waiting in the banks to be loaned by someone. And if there's no money, the banks are capable of producing money out of thin air to loan you. So make sure your credit score is immaculate so you can take loans and profit from your debt.
More Americans are making their payments on time, and credit scores are soaring as a result.
You may go against conventional wisdom because debt is seen as a downward pull on an individual's finances, but if used correctly and managed appropriately, debt can allow individuals to make purchases they wouldn't otherwise be able to, enhancing their return significantly. This brings us to the end of our video. Do let us know your thoughts in the comments down below. Well, we'll see you soon, so stay tuned. Until next time, take care and goodbye.